So next presentation, I know first. Thank you.
Good morning. My name is Yaron Golger. I'm the CEO and co-founder of I Know First. I Know First is an Israeli fintech company. Our main product is a predictive algorithm that generates daily prediction for the financial market and identifies the most promising investment opportunities. We are predicting more than 3,000 assets from different asset classes, including stocks, commodities, currencies, ETFs, interest rates, and world indices, with predictions for different time frames, long, mid, and also short term. The brain behind the algorithm is Dr. Lipa Reutemann from the Weizmann Institute of Science, one of the leading experts in the field of artificial intelligence and deep learning, with more than 20 years of experience. And Dr. Reutemann leading quite unique R&D team that based on PhDs, AI and machine learning experts, data scientists, as well as professors from Tel Aviv University, and IDF veterans specifically from the intelligence unit. So what do? We are offering AI-based predictive solution for institutional and retail clients from all over the world. We are working with banks, hedge funds, family offices, and brokers from all over the world. So how are we doing it? Every day our algorithm is collecting quantitative data from the financial markets. We are adding the daily data to our stocks database. Around the clock, the algorithm is learning, identifying the patterns, and before the next day, we are getting the most updated prediction for the different time frames. The algorithm is self-learning, so the results are always improving. It's working on the same principle as the self-driving car. We are just implementing it for the financial markets. We are combining into one machine learning algorithm different approaches. We are utilizing deep learning and artificial neural networks. We are using reinforcement learning, and we are using also genetic algorithms. Every day, the algorithm is generating for each asset class this heat map. In this heat map, we can see the prediction for each particular asset and also the internal ranking of the entire investment universe. The most promising investment opportunities are going to be located at the top part of this heat map. And for each prediction, there is also confidence level based on the past predictions. We structure two tiers to our solution. The first tier serves as a decision supporting tool for an investor that would like to take a smarter decision in the market. It's possible to customize it. It's possible to focus on specific sector. It's possible to set fundamental criteria, fundamental filters. It's possible to customize it to UBS investment universe. It's possible also to focus on specific geographical areas. So we already implemented it in the based on the US stock exchange, Europe, Japan, China, and Brazil. On top of it, we developed a wealth management solution. The wealth management solution is converting the daily decision supporting tool or the daily prediction into a portfolio, including the allocation of each asset and the adjustment process. Here we can see the performance of our algorithm during the last year. The idea here is to convert each strategy that we see here into AI-powered investment vehicle. It can be an ETF, it can be smart beta ETF, mutual fund, or even an hedge fund. We see synergy with different divisions within UBS. With the investment bank, it's possible to utilize it as one of the quantitative research models in order to predict stock prices, currencies prices, interest rates predictions. It's possible to integrate it into the NEO system. It's possible to customize the prediction based on the client's portfolio on one end. On the other end, it's possible to offer trade ideas based on the algorithm as a decision supporting tool. With the asset management division, it's possible to develop new AI-powered products by utilizing the algorithm. With the wealth management, it's possible to focus on the long-term prediction and to use it as a decision supporting tool as part of the research and as part of the advisory. It's possible also to get AI-based forecast for different sectors, for different geographical locations, and it's possible also to use UBS alternative data sets as part of those models. Thank you very much.
Okay, I have Question regarding the outcomes for your clients. So you mentioned what you can do, but what have your clients achieved? Can you share examples of how much, what was really the achievement, and do you share what they could gain in your fee model, or do you just provide the algorithm?
So it depends on the solution that we are offering. If we are talking about the decision supporting tool, this is a decision supporting tool. The client is executing. It's as part of, it's another research tool that he is utilizing. He can monitor his own portfolio. He can use it in order to get ideas. He can customize that prediction, but he's the one that's deciding to execute and how to execute. If we're talking about the second tier, in the second tier, we are going into the execution level. And now we are suggesting a portfolio to the client, but still he can decide to execute it, or he can decide not to execute it. If he would execute it, you can see the performance right here on the right side.
This is the theoretical performance, right?
This is based on we are working with leading banks in Israel to structure AI-powered products, and this is based on the live account.
Yeah. And can I ask you one on your algorithm? You have a fixed set of attributes, or is this dynamically, basically enriched when you talk about ML?
Well, we are utilizing quantitative data sets, and the algorithm itself dynamically deciding what is the most important data set with the most predictive value on each period.
But you can also dynamically recognize new attributes, and you would enrich it within your existing algorithm.
Correct.
Okay.
I loved your idea, if I may be very devil's advocate. If your guys are able to predict up to 3 months or 3 days, why would you sell the algorithms? Set up a hedge fund and make a ton of money yourself.
This is exactly
And what is your return for from February to October of last year?
Yeah, so it's an excellent question. First of all, the business model is based on revenue share. So this is exactly what we are doing. I'm talking now about the second tier. We are profitable since the beginning. We never raised money. So.
And what was your return for February to October of this year, and how did it track against?
Here you can see the performance during the last year. In the beginning of the year, the market went down, but because it's a long-short algorithm, you can see that actually some of the strategy has a positive return during those days.
Just that I understand the chart, is this the outperformance against the index, or what is it?
Correct.
Like the red curve. So
Correct.
you're beating the S&P 500 by 12%.
Yes, here we are comparing ourselves to the S&P because here we were focusing only on S&P 500 stocks. That was the requirement of the client that we are working with because of liquidity issues. But it's possible to customize also the investment universe. It can be S&P 100, it can be Russell 1000.
And what I haven't really understood what input factors is this algorithm using. Is
Okay.
it just the movements of the asset prices, or is there any other input factors being considered?
We are utilizing quantitative data sets. We are utilizing fundamental data sets. We are trying to focus on objective data sets, on numbers, and not to take into account news because of the risk of fake news. So basically, we are utilizing really large data sets that based on objective data sets.
How good is the algorithm in a stress situation? Have you tested? Have you experienced something? We didn't have a big crash last 2 years.
So the algorithm is supposed to identify the situation in the markets that you should, stay out of the equities. And when the market is going down, the money is going to some other asset classes. And because we are looking at the financial market as one system, the algorithm can identify those price movements between the asset classes. So when you see negative signals on the equity side, you need to look for the equivalent positive signals in other asset classes.
Have you backtested it?
Yes. By the way, the performance that you see right there, it's not a backtest. This is live portfolio, and this is a huge difference. The backtest, because it's a self-learning algorithm, by definition, the backtest is going to be really good, but it's not showing anything because the algorithm already calculated what happened in the past.
Okay, Arno first, thank you very much indeed.
Thank you very much.
Thank you.